You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.
And now, it's time for the show that breaks down the options market. From unusual activity alerts to market updates and trading strategies. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the option block with your host, Mark Longo from theoptionsinsider.com, and co-hosts, Uncle Mike Tusaw from RCM Asset Management, Andrew the Rock Lobster Giovinazzi, and Mark the Greasy Meatball Sebastian from OptionPit.com.
All right, everybody, that rockin' tune means it's time once again for the Option Block, everyone's favorite bi-weekly source for all things options related. My name is Mark Longo, beaming to you from the Options Insider Radio Network studios here in scenic, well, it's not too sunny this time of year, but still getting a little bit chilly now. But still the options capital of the world, Chicago. And of course, we produce a lot of great programs here on the network, 13 to be precise. Not all of them up and running at every given moment, but 13 of them out there, and we're looking to evolve and revamp and maybe add some new ones to that mix as well. So stay tuned for that. And of course, where can you find all that fun stuff? Well, probably the easiest place is just head on over to our website, The Options Insider. It's all baked in there. You can contact us there. You can stream, download the radio from there. You can read our news, our activity, our breaking news, our updates, all that fun stuff from the site. So pretty much that's the mecca. If you want to go there, it's all there. Of course, you can find us a bunch of other outlets, iTunes, TuneIn, Stitcher, etc. Grab our mobile app, available in all the app stores, or just find us on all the various social media. Twitter.com/options. Pretty easy to find us there. That was a pretty good handle, pretty good grab on our part, and was a lot of other destinations as well. So no shortage of ways for you guys to find our content. While you're listening, send us a question, send us a comment. We love to hear from you guys. And speaking of other guys, I'm joined on the program by two other guys, my two cohorts here, my partners in crime, as we attempt to navigate this turbulent thing called earnings season, starting off a little bit closer to home. You know him, you love him. As Uncle Mike Tusaw, he is himself a big fan of Dr. T and the Woman, that great Richard Gere movie. Uncle Mike Tusaw from RCM Wealth Advisors. Uncle Mike, welcome back to the program, sir.
You're inspiring me. I kind of want to see it now. Dr. T and the Woman. Never heard of it, never seen it. For all I know, you're just making it up, but I know you're way too witty to make things up. You actually go with the real deal, baby.
Yeah, I don't want to get your hopes up too much. I wouldn't say it's a fantastic film by any means, but it does have a certain resonance, at least when you're on the program.
Got it. Well, hey, that's me, Dr. T.
All right, and also joining us from the far, far removed, the hinterlands of Maine. I do believe they speak English there, though I'm not really sure. We'll have to check in with him. He is the Rock Lobster himself, Mr. Andrew Giovinazzi. Mr. Rock Lobster, welcome back to the program. And what is indeed the mother tongue of Maine?
They speak Nana. There's no Oz.
Yeah, ours are optional. I grew up in southern New England, but still, yes, ours are indeed optional. And that took me a while to get over that. I wasn't good at saying ours for a long time when I was a little kid because of that. So I blame New England for all of the ills that befell me afterward.
Oh my God.
That's a long list.
That's a long list of ills right there.
Keeps my many therapists very busy. But before we delve into my many and myriad issues, we'll keep on rolling right on into the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the Trading Block.
All right, everybody, welcome to the Trading Block. This is indeed the portion of the program where we break down what's lighting it up on the old street today. And it seems like the narrative for at least most of the day going right into the close was pretty much, I guess you can call it revenge of the Fed. The Fed rides again, call it what you will. I know we've been saying on the show for a while now that we're happy the Fed's out of the way. By the way, we are recording this on Thursday, October 29th for all of you playing the home game out there. And happy to be focusing on some more straightforward issues. Earnings, are they meeting the numbers? Are they not? How's that looking from an implied vol and a volume and open interest perspective, et cetera, et cetera. Things you can really sink your teeth into. Meaty, consequential things rather than the will they, won't they dance with the Fed. Well, the Fed apparently didn't like that too much. They want to be back in the conversation. So Miss Yellen and the crew poking their head out of the groundhog hole again today and saying, don't forget about us. We're back here and we still may do something by the end of the year. And unfortunately, the data coming out today gave them a little bit more of a leg to stand on, I suppose, with new applications for unemployment pretty much near levels that haven't been seen since the early 70s, 1973, I believe. So on the strength of that number alone, the market and the news, of course, out of Yellen, the market took it on the chin. The S&Ps were off most of the session, hitting a low of about in the low 2080 realm. And then they proceeded to rebound toward the end of the day, closing essentially pretty much unched on the Dow side as well and in the Q. So a bit of a rally there towards the end of the day as people all of a sudden apparently collectively deciding the Fed news not as dire as perhaps they initially anticipated. Again, I don't turn this into the Fed cast because nothing would bore me more, but I'm trying to think of another time, and maybe Rock Lobster, Uncle Mike, maybe you guys are aware of one, another time in recent history where we're talking about raising rates while there's QE about to go on or going on in Europe and emergency slashes in China, and we're here putting the brakes on in the States. I can't remember another time when we've been in a scenario anywhere close to that. But c'est la vie. I haven't studied all of my recent global macroeconomic data to see when the other times that may have occurred. But still, it seems like a bit of an odd scenario. That said, keeping the attention a little bit closer to our wheelhouse here on the old program, of course. We are, of course, recording this 29th, a day that may have a little bit of resonance to you listeners because it was indeed on this day back in 1929 that we had the crash of 29, so a bit of a historic, or should I say infamous day from a market perspective, one of the earlier quote-unquote black swan type events that really set off a lot of horrible things, including the Great Depression and everything else. So a bit of an inauspicious day on the old street today. Not to be held back, though, some decent earnings coming out of some decent names, including in our neck of the woods, CME. The street loving what they're seeing out of there, apparently. Higher volumes across the board, growth in the company's market data. No surprise, they're charging more for it, so they're making more money on it. That was up pushing 100 earlier today, so that name's up about 1.5% intraday out there, so a lot of love. Also, Coke reporting before the bell, about as exciting as that sounds. I think it had a 60-cent range intraday, so Coke, Warren Buffett's favorite, not so much here on the program, doesn't really light up the old tape. Aside from that, a lot of other stuff moving and shaking. Perhaps we'll start in the hinterlands. Mr. Rock Lobster, do it in whatever language you prefer. American, English, or Mainese, whatever you like. And what caught your eye in today's activity, sir?
I don't want to drop my R's and annoy everybody. So not much happened. I had a hard time trying to find anything to do. A little takeover activity heating things up with Allergan Pfizer possibility. So there's been a lot of takeover activity. As far as the market goes, we had such a huge run up yesterday. It was hard to fathom us rallying more without a reason. And what was the reason yesterday is that, we're doing nothing because everything is so great. We're not going to raise rates. I don't know how long that continual, that continual rally can go, but right now it's enough to get us almost back to all-time highs again. So I think I was going over at one of our classes. I think just the VIX futures are sort of locked up here as it's, okay, we're going to raise, we're not going to raise. Oh, we might raise, we're not going to raise. And I think the whole volatility market's just kind of locked up. Like, we're going to kind of hang out here and see what happens. And that feels like kind of how it's trading. It's back into this lock-up Fed mode till the end of the year. And, maybe we have a range of 2% up or down between now and, I guess the middle of December when the Fed comes out with some other, whatever else they're going to say.
They're saying they're punting till January at that time, or
and
March or whatever.
The only thing that really I thought lit things up a little bit was the kind of big tech, the big ecosystem tech names like Google and Microsoft and Apple had pretty good earnings, that part of the world, that stuff is growing, and the valuations are definitely, the Qs are at all-time highs, and besides Amazon being in some sort of, their valuation is in the clouds, but Google, Microsoft, Apple still are not outrageously expensive stock. Google's what, a 20 something PE, Microsoft's 15 or 16. We got Facebook is not a cheap stock. So there's some are expensive, some are not too expensive. Obviously, Apple valuation will be a 10 PE forever after you back out all the cash they have, until they reinvent the car business or something like that. But that's what we have. So there was some good stuff. Obviously, commodities and oils are just sort of kind of in nowhere land. And as far as just things that are really ripping and rocking, it's hard to see anything that's doing that. Like what's the latest craze that's catching somebody's eye besides maybe biotech recovering a little bit on some of the takeover stuff. It's really hard to find anything, that really has a lot of upside, juice going.
I don't know about upside. Well, it did have upside juice for a while there. That was, of course, the shiny stuff. Gold. We talked on recent episodes about the upside skew really just being bid to high heaven. People coming out calling for 1x3s, et cetera, et cetera. And we did see a bit of a flirtation to the upside. It was very brief out there, though, in the gold futures before Miss Yellen and her crew waved their finger and gold took a bit of a turn. Of course, dollar rallying on that, gold coming off a bit, and that has been kind of ending at least near-term hopes for a bit of a spark in the shiny stuff. Of course, looking at the Fed funds, not surprisingly, they're going into the meeting at about a 30% pricing in a probability of a rate hike in December. Now it's pretty much 50-50, so a coin flip in December. So well done, Miss Yellen, adding yet more uncertainty to the marketplace here. But I'm sure the shiny stuff caught your attention, Uncle Mike. So let's start there, and then we'll go into anything else that really caught your eye in today's activity.
Yeah, I still like gold as a shorter-term trade. I know we're down a couple percentage points since Miss Yellen heard me talking on the show about how much I liked it, and I think she has a grudge against me for some reason. I'm not sure, but in looking at it, I really don't see the Fed raising rates in December. Just with everything that you had mentioned before, Mark, the rest of the world is talking QE and printing more money, and we're talking about tightening things up. I just don't see this adding up, quite honestly. And but I could be wrong. You never know. But definitely, I'm looking forward to us getting to a more normalized policy. Not to steal the words of Janet Yellen, but I would like to see more normalization. And my type of normalization is them not being the focal point of everything with which we do now, always, and forever. Other couple things that are catching my eye. We had over the course of the last couple of days, it's been a great day trading market, and that today not so much, but yesterday, obviously, with the Fed coming out with their news, it was interesting. It held true, the old saying about how the first move is oftentimes the wrong move when looking at a Fed announcement, and that held true yesterday for sure, because right after the Fed made their announcement, S&P dropped, just looking at here, over 20 points in the course of a few minutes. And then, of course, they ended up finishing positive on the day. We channeled for the most part today, so there really wasn't a lot that was happening today. We did gap down a little bit, but throughout the day, we did recover almost all of the gap, with SPY only finishing down 6 cents. So all in all, there really wasn't too much that was happening today. The only thing that I would like to mention, just a couple of individual names. Apple. It's one to where I did feel that Apple was going to, if anything, go to the downside, and I thought it would go to the downside. I figured we would beat out the straddle on Apple. I thought we'd get more than the $4 worth of movement or whatever the straddle is pricing in. But another good reason for me not to be in a stock that I don't have my finger on the pulse of, because I obviously was dead wrong on that one. So good thing I'm not in that one at this stage. The other thing to mention, as a side note, Starbucks just came out with their earnings, it looks like, and they're down $1.50 after announcing. And then the other thing that I think's been kind of unique to watch over the course of the last couple of weeks on an individual name, and I don't have any positions in this at this point in time, but I've been talking to some clients about this. If they're looking for, and I mentioned it on the show a couple times as well, if you're looking for something to just get into after the big dip that we had over the course of the last couple months, is J&J. Over the course of the last month, as of September 30th, closed on that day at 93.35. And right now it's trading at 101.37. So that has had a very nice run lately. Not that that's really the end all be all of excitement in the stock market, but the fact that it is a stock like J&J that typically doesn't move too much, it has had a rocking October. So it has been a Rocktober for J&J.
Uh-oh, you invoked it here on our final program of October. It seemed like we had mostly escaped the month with me only invoking the dreaded Rocktober a few times, mostly for mockery's purposes. And here you are, sir, twisting the knife one last time as we bring October to a close here on the old option block. You're right about Apple, a bit of a rally to the upside. Initially, it looked like it was going to dramatically kind of underperform that straddle, and it's one of the first times we've seen Apple doing that in a while. And then it seemed like that move kind of continued and progressed over time, and it seems like we eventually got, I guess what the upside zealots were hoping and or craving for. You mentioned good old S-Bucks. They are indeed coming out here after the bell. They closed at about 62.5 even right there. They were pricing in about a little over 330, I think, or so in the straddle, so a little over 5%. They were expecting after hours here were off about $1.60 or about 2.5%. So about half of what they priced into that straddle is hovering right around 61, a little bit south of 61 right now. We'll see if that holds up. Apparently, the street not liking what they're seeing so far out in the land of tasty and perhaps overpriced coffee. Moving our attention, some other big names coming out after the bell here that I know you guys like to keep an eye on, including Baidu. Looks like perhaps that number may not be out yet because it's kind of pretty much unched, closed at about 168, and it's pretty much hovering right up, 169 roughly, and it's down, unched pretty much on, for Baidu it's unched. It was pricing in about a little over almost 8% move, so far nothing, which leads me to believe that perhaps the game is not yet afoot out there as we turn our attention to another big name. I know, Mr. Rocklopsy, you like this sector. This is the gaming side of the fence. Not the gambling so much, but the video gaming that Mr. Rocklopsy is such an aficionado of, and seeing Electronic Arts, one of the big publishers in that space, coming out today after the bell as well. They closed at about 76 even. They were off nearly 1% intraday, and they're off about another handle in the after hours. They were pricing in a nearly $5 straddle, about 470. That comes in a little over 6%. So far, again, dramatically underperforming. So we'll see if these narratives hold true as the show progresses. But so far, it seems like underwhelming, at least from a vol to a vol delivery perspective, I suppose. But we'll see. Again, these are early moments, and anything could play out. Mr. Rock Lobster, any of these earnings catching your eye out here? I know you like the game and stuff. Anything lighting it up in the pit chat today with these names?
The pit chat was mostly we were looking at Walgreens and seeing if Twitter, the Dirty Bird, could actually produce anything. So we ended up with nothing. As far as Electronic Arts, we don't do a lot of pre-earnings spec, mostly because it's sort of like throwing darts at a wall. So
I thought the tagline for Option Pit was buy the straddle and go away.
Sometimes it is. Not this cycle. I haven't bought any. I have bought no earnings juice. I did own some Microsoft a little bit, but I closed it before. Of course, it went up $5 or $6 for it made a whole 3 cents. But other than that, we haven't bought a lot of juice, mostly because a lot of it this time has been a whole heck of a lot more expensive than it was in the last cycle, by a pretty fat margin. So, we're just mostly buy standing, and then after the earnings, jump in to do something.
Speaking of earnings, I'd be remiss if I did not also mention that frequent high flyer out there on the social media side. I guess you can call them social media. They're not really, but they are. LinkedIn, of course, they're reporting after the bell. They closed 217 even, up nearly 2% intraday, and lighting it up after hours. They closed, that straddle went out at looks like about $21, $22, and looks like here in the after hours, they're already up nearly 21, about 20.5. So pricing in a slam dunk and delivering here, as apparently the street liking what they're seeing out there in LinkedIn land. So we'll keep an eye on that one as well, listeners, to see if it can keep up that kind of performance. But that one seems to be the sole name, at least here in the after hours, That's knocking it out of the park so far. So we'll keep an eye on these. Meanwhile, it's time for us to turn our attention to the darker, the more dubious, the more distrustful side of the option space. It's time for the Odd Block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
All right, everybody, welcome to the Odd Block, the portion of the show where we investigate, put on our little sleuthing hats, kind of like our little logo fellow there on the Options Insider, and we do some digging into the dark side of the options business. I don't know about you, Mr. Rock Lobster, but when I think dark, dirty, dangerous, gritty, and activity, I think, of course, the Tiffany Network. Who else? And that is indeed our first stop here on the old Odd Block today. Listeners, of course, and talking about CBS, ticker symbol, appropriately enough, CBS, closing today $46.62, up a little over a handle, about 2.5% on the day. That's the name that does. About 11, nearly 12,000 contracts a day, doing nearly 60,000 today. So a substantial bit more, to put it mildly, there, listeners. And it looks like the lion's share of this activity came in what appears to be a very, very sizable roll. What caught our eyes first up was the Nove 46-48 call spread going up for 210 on the 46s, $1.21 on the 48s. Looks like paper selling the 46s, buying the 48s. Open interest on these strikes. Well, it did it for a total of about 16,000 contracts, so 32,000 of that nearly 60,000 total in this one spread. It looks like about 16,000 open on the Nove 46s and only about 9,000 on the 48s. So it looks like we have indeed the old upside roll. Our friend here liking what he's seeing so far. Clearly those 46s pretty deep in the money now, 60 cents in the money here. And he's deciding, you know what, I'm not giving up the ghost yet on this rocking and rolling beast known as the Tiffany Network. I want to double down and get some more of these 48s. And that's exactly what he did. And he did it 16,000 times, going up 2 blocks there on the Philly. Also saw some 50s actually going up as well. I shouldn't neglect those. Nearly 9,000 of those going up on just 33 contracts open interest. Those appear to be leaning towards the buy side as well. So it seems like our friend here, Mr. Rock Lobster, this is indeed all him, and no reason why it wouldn't be. He's loving himself some serious upside here in Tiffany. I'm just going to pull up a little chart here as we look back over the last 6 months or so, and even over the past year. It's not hard to see why perhaps he may be leaning that way. This one, having sold off fairly aggressively, was flirting with the 60 handle and even about 62 or so as recently as June, and then kind of took it on the chin. Been a long, steady downward progression ever since, before it bounced, got into the 30 handle before it bounced about 38, and now it's kind of looking to the upside again. And our friend here saying, you know what, the roller coaster is heading back up the track, and I want to get on. I've already made some money, let's make some more, and why not just buy every strike up there? So Mr. Rock Lobster, kick us off with this call palooza here in CBS.
This is like the classic value change. So right now, Tiffany, it makes, the company generates the Tiffany Network anyway. CBS generates cash. And then there was the freak out on cable and everybody cutting the cord, and all of a sudden nobody's going to watch sport or Showtime and blah, 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 blah. And everybody freaked out. So they took all the multiples out of these companies. Whack. And I think somebody here is getting pretty excited about, having that multiple put back in. I mean, that you're buying 50 calls into earnings. You're paying like 63 cents for them. I could see they rolled this 46 up. It could be a house money roll easily. They probably doubled their money or better on the 46s. So it looks like closing and rolling up to the 48s, and then buy some 50s. What the heck? I'm not long enough. I want to get longer. And that's what we got. So, and I think they're looking for, well, maybe the death of cable was overstated, as most things usually are, and they just want to get long, stay long.
Yeah, hard not to argue with them, at least so far, because they're doing all right. But maybe you can take issue with some of the strike selection and perhaps the size. But other than that, yeah, so far he's playing with house money, so he is indeed emboldened. We shall see how that plays out as we move on to our next name. I'm trying to think. We've talked Walgreens before on the show, and clearly they're in the news these days. I'm not sure if we talked the Walgreens Boots Alliance, which I do. I just love that name. It implies so many myriad and different businesses in one name. Do they make boots? Are they Walgreens? Are they a little bit of both? It's a great name for sheer retail confusion. You've got to love it. Of course, ticker symbol WBA. This one closing a little bit south of 84, about 83, 88 or so, off about $1 in today's trading. And of course, this one has been moving a bit of late, of course, on heels of earnings and indeed some news out there in the old retail pharmacy space to the tune of RAD and Walgreens joining forces, coming together to create the unholy alliance that will be the joint entity of the two. And what caught our eye, well, first, before we even get into that, this name doing about 15,000 contracts a day, nearly 16. And today doing about 2x that, about 30,000 contracts catching our eye out here, drawing our attention once again to good old WBA. And what in particular caught our attention was out here, not in the old weeklies, no, listeners, but in the regular NOV, the NOV 80 puts. They started going up this morning nearly 1,000 times. Looks like paper selling. One block on the bats for about 64 cents. We saw some smaller blocks going up afterwards on both that strike and the 88 half calls as well. Some interesting strikes out here in WBA. Total of about 3,600 of these NOV 80 puts went up on about 2,500 contracts open interest. So clearly some open in paper, and about 4,000 and change on the 88 half calls on pretty much negligible open interest. There are only about 200 contracts open in there. So it seems like we're looking at an aggressive strangle seller out here saying good old Walgreens Boots ain't going nowhere, at least nowhere fast, and he's putting his money where his mouth is. It is worth noting as well, listeners, that if you go a few ticks north of those 88 half calls to the 90 strike, there's size open interest out there to the tune of 43,000 contracts. That could be tied with this. That was a delta neutral trade that went up a few days earlier. So interesting one there. You may look at that size and assume it's just an underlying holder who's dumping a bunch of calls to generate some income, but apparently went up with some stock of its own. So a lot of weird things afoot in the old Walgreens Boots Alliance. Mr. Rock Lobster, what's calling your attention out here today? What's catching your eye amongst the sea of activity here in WBA?
In Walgreens Boots Alliance, like it used to be like that company. Walgreens is a 100-year-old name, and then they throw the boots on it.
Yeah,
I guess that's
good branding there.
The Boots guy that they bought Boots, but that guy was such a big shareholder of Boots. Now he's the biggest shareholder of Walgreens. So when you're the CEO, you're going to call it what you want. But anyway, somebody's old-fashioned selling some juice. It'll take a while for this. My sense is, so they're going to try to buy Rite Aid. The Justice Department probably won't tell them they can't do it within a month. So with the jump in vol, they just came in and sold paper, just sold a bunch of juice, calls and puts. And maybe because Walgreens isn't going to do anything until you get an answer. And against that, I think somebody looked like, anyway, it was too hard to tell on the, I went back, it was last week. Either way, though, it was pretty good timing on that, the WBA. If it was long options and short stock, they did pretty well because they had a $10 range. So I thought this could be them trying to sell some premium against that 90 strike. Hard to tell, though, because it did go up in kind of a delta neutral fashion. So it just looks like good old fashioned. I think the stock is kind of locked up here, probably in a range for a couple of days, or at least through November. I don't believe there's any earnings anymore, and it's sort of, as far as moving goes, it's sort of done. So we'll see what happens.
Yeah, and our friend here saying, looks like it's not going anywhere anytime soon and willing to put some size money where his mouth is. Not perhaps as sizable as our friend on the 90s, but still pretty sizable activity. And we'll round it out with some more sizable activity here. Now, I know we're all pretty fashionable fellows here on the old program, but we don't delve into the realm of fashion that often here on the program. So we thought we'd address that shortcoming today by rounding out the old odd block here with a quick dive into good old Kate Spade and Company. Ticker symbol, appropriately enough, Kate, K-A-T-E. Closing today, $18.19, off about 35 cents or so, nearly 2% on the day. This is the name that does just about 1,000 contracts a day, so not lighting it up so much from an overall volume perspective. From an odd block perspective, not bad. But from an overall volume perspective, it's no Apple, it's no VIX. But today, doing some decent paper to the tune of over 30,000 contracts, lighting it up today. And what caught our eye out here, listeners, was a sizable tide trade going up in the Jan expiration cycle, in particular the Jan 20 calls that went up fairly aggressively sized. 20,000 was the first block that caught our eye. Looks like paper buying for $1.25. Open interest just a little over 1,000 contracts. So clearly that is all open all the time. There went up in one block over there on the Amex. We also saw a mega chunk, to use a technical term, of stock, about 800,000 shares going up for $18 even. That was not a great fill. Even when this went up, that was not a great fill. Roughly below the market. Sometimes they do those prints. They put them up out of sequence. Sometimes they give up a little bit on the stock to make up for what they have to fit the price they need for the option. So there's a little bit of wiggle room in there. But on the surface, not the best stock fill. Over about 5,000, nearly 6,000 more of these calls going up total to the tune of about looks like, about nearly 6,000 total. On the day. Still interesting stuff. The latter kind, we don't have the stock on it, so we don't know if they had, I'm assuming they went up delta neutral as well, but we don't have the prints for those. Either way, interesting stuff. Gobbling up some calls, and indeed perhaps shorting some stock a wee bit aggressively. Mr. Rock Lobster, take us home with our segue here into the realm of fashion.
You know what? You should have Sebastian on this part of the show.
I was just thinking the same thing. This reeks of Sebastian, the fashion element. Not that he's a fashionable guy. He just likes talking about it.
Well, his wife buys him fashionable clothes. That's what's important. She does all the dressing in that
His
house.
wife buys him clothes from like Hot Topic.
Yes. I think Kate Spade looks like a lot of these other fashion stocks that were the hot thing, and then they tend to cool off a little bit, and somebody wants to own them some Kate Spade. It looks like from just where all the pricing was, like it was more like a backspread type trade. So they're looking for a big move over 20. That's what it looks like. The range of the stock is basically between 18 and 20 for the last 2 months. So this would have to be something pretty spectacular, if it was a buy rate, they got a pretty nice fill on just about everything. They got to buy stock way below the market and sell calls above the bid. And as you know, Mr. Longo, that just happens almost never.
Happens all the time. So you're saying they were selling calls and buying stock?
Well, I thought that's where I
looked at it the other way around. I was thinking they were buying calls.
Stock and bought calls.
Yeah, I was thinking they were buying calls and selling stock. If that's the case, the stock, you could do better on the stock. But the calls they did all right on, because you got to love a day. Obviously, they're doing some size when the stock sells off and the calls are still bid coming out. So you're moving some volume then.
Yep. But the only way I could think is, when was the last time you saw a customer be able to buy stock below the market and sell calls, at a good clip above the bid and somebody took the other side of that?
Oh, definitely not. Yeah, that's nice to be on the facilitation side sometimes. Yes.
Yeah, so, I just didn't see that. So
When people,
thusly, I think the customer ended up buying call selling stock, or he has quite possibly the best counterparty side ever.
nice when the customers just come in and just give you money. Here you go. Take the other side of this for me, please, sir.
Just take it off my hands.
And I'll pay you to do it.
Take it off my hands. I don't want any.
All right. And speaking of taking things off your hands, we're now going to take all your questions and your concerns about the world of options off your hands and onto our shoulders, because it's time for the mail block.
It's time to take your seat on the All-Star panel as we read your emails, tweets, Facebook messages, website comments, and much more. It's time for the mail block.
All right, everybody. Welcome to the mail block. This is indeed the portion of the show where we break down your questions, your comments, your insights, your analyses you'd like to share with us as well as with your fellow listeners. No shortage of ways for you guys to do just that. Hit us up on email, questions@theoptionsinsider.com, or on your various social media outlets, including probably the easiest ways to hit us up on Twitter. A lot of you guys like to use Twitter. We're just at Options over there on Twitter, The Options Insider, Facebook, Options Insider on Stock Twits. We should do more on Stock Twits. I don't think we just focus so much on Twitter, the mothership. We don't have a lot of energy left over for the Stock Twits platform, but we should be doing more. If you like Stock Twits, think we should use it more, let us know, of course, or just hit us up on the website, use the feedback form, et cetera, et cetera. And again, it's all baked into the mobile app there as well for you guys to find it. So let's see. Let's kick things off. This is the timely question. Comes from 603. Maybe he's a robot. He or she writes, hey, before a report like FOMC, is buying calls bad due to vol premiums? Timely, again, because we did just have the Fed inserting themselves into the market again. And this kind of analysis, we talked about this before, but it applies not just to FOMC, but pretty much to any big anticipated event in the marketplace. Could be an earnings announcement, could be a crop report, whatever you're trading. If there's a conference call, if there's some big anticipated event coming out into it, chances are you're going to see the vol creeping up in that name going into that event. So in this scenario, would be buying a call or buying premium at all in any of these names right before the big announcement. Is that a good play? 9 times out of 10. It's going to be a horribly bad play for the reasons we've outlined many times in the show. You can see it again today here after the Fed news coming out. A lot of that vol kind of squeezing in a little bit. Of course, then we had the sell-off later, so implied vol coming up in the S&P and things. But in individual names out there, a lot of them getting a little bit of an inhale after that announcement. And we certainly see that more in big names. Looking at the earnings cycles for any big names out there, and you can pretty much see this play out 9 times out of 10. It's why some people are tempted to go short, go to the dark side going into events like earnings. We've also cautioned against that because the one time it doesn't work, the 1 time out of 10 where it doesn't, it really can leave a dent in your wallet, which is why I know Rock Lobster, I know you're a fan, and you guys over there are fans of that relatively more risk-neutral approach of if you want to buy a premium, do it somewhere in the 2 weeks to like a week and a half before the announcement, and then ride it, get whatever gamma scalps you can, get whatever delta movement you can out of it, and then get rid of it going into the big event. So you don't have to worry about riding it over the proverbial waterfall, the Niagara Falls that is the earnings event, and you can just get your free swing at the bat. Is that still your preferred modus operandi, sir?
It is, and with the Fed stuff, we try to kind of short volatility where we can if it looks interesting to do via the vol products, like VXX or something like that. So that, yes, nothing has changed in that score.
I thought maybe you might be all about selling straddles some these days or something, just to mix it up a little bit.
Well, if it worked, I would do it.
Not just straddles like Christmas, like strips, like the whole month. Short it. Just go when in doubt, palms out.
There's every once in a while you can see like some Christmas trees or something like that that put you, when the vol is so crazy high, it would put you in somewhere that a very, very low price. But where a lot of these stocks are right now, it's a lot tougher to do something like that.
Tusaw, you've had enough of a break, sir. I'm going to grab you kicking and screaming back here into the action. What do you have to say for our friend, the robot/droid, Mr. 603, who wants to know, should he load up on all sorts of primo going into these major events?
Well, I think if you want to play an event like this, like what I would used to do with Apple a lot with the earnings, back when I traded it, which based on what I said on the program on Monday, thank God I'm not trading it that much anymore. I'm just owning some shares for the most part. But what I would like to do going into an earnings announcement, just from the viewpoint of a hedger, is that if I felt that implied volatility was low, then I liked to do a back spread going into earnings, meaning that I felt that if the market went way up, I would have it set up to where I would break even or maybe even make a couple pennies, something like that. Nothing too big of a deal. But if the market went down, I would have full protection to the downside while owning the stock. So the way with which I would play earnings, if I did, which I don't, and meaning by playing them, meaning actually going into the announcement itself, I would look for things that I felt were a low implied volatility, and I'd want to have at least somewhat of a bias on it, to where my bias would be a little bit bullish or a little bit bearish. And if I'm a little bit bearish, for example, I'd cap the upside and make some money from the short call that I would sell, or make it so that by capping the upside, it reduces the cost of a straddle. Because if you just go in and buy a straddle, you're right, Mark, you're going to lose, I don't know about 9 times out of 10, but at least in my experience, it's closer to 10 times out of 10 for people I've seen try and do that, but maybe not quite that much. But either way, it's very tough to stomach. So if you are going to play earnings, I would suggest having a little bit of a sentiment one way or another. If you're really bullish on it, buy a bull call spread. Keep it simple. Use the higher implied volatility to spread it off, and that way you have a position on it. If you're not quite as bullish and you want to be a little bit neutral, then I would suggest going the back spread route. But in terms of doing just a straddle, either buying it or selling it, it's not very successful, at least in my experience.
Yeah, it's a rough road to hoe. So yeah, our collective wisdom would say nay to that one, Mr. or Mrs. or indeed it. 603. Yeah, I like that handle. Let's see. Moving on. We got time for a few more here. This one comes a lot of numbers on today's show. This one comes from 777. Here it's, hey, do you notice anything different in the options trading in higher volume? He mentions futures, but stocks or whatever versus lower volume products. Yeah, and again, this applies to, options on futures, options on equities, options on whatever the heck you want to have an option on. High volume versus low. I think we talked about this a lot on the program too, maybe just to reiterate there. Most of those impacts you're going to see are going to be directly visible in the bid-ask spread. That's the best place to see exactly what you're working with. If you're wondering, is a name liquid? Is it viable for trading? Just look at the bid-ask spread. If you see that it's very tight and there's a decent amount of size there, it's pretty liquid. If it's wide and there's still not much on the size, then it's probably not that liquid. And that's going to be pretty much the most impactful difference between a high and low volume name for you guys out there who are trading these products. At the end of the day, that's your real cost of getting in and getting out. And if that spread is wide enough to drive a truck through, to use that old oft-abused cliche, that's going to cost you a lot to get in and get out. It's going to probably make you less incented to actually want to trade it, and that's a demonstrably bad thing. So if you go into those names, just check out the bid-ask spread. That's going to, before you do any other analysis, that'll tell you 90% of what you need to know. People will get into other stuff, look at open interest, look at these, these other averages and things like that, and get a sense of that, and that's all valuable, but the first and last place that really matters to you is the bid-ask spread. And if that's not up to your standards in terms of width or size or anything like that, then you may want to think twice about trading that problem. Let's go back to the land of, I almost said Elgin, but the land of Uncle Mike, where indeed, St. Charles, thank you, I was blanking on that, what do you have to say for our friend here who wants to know, what's the difference, high volume versus low volume products?
I don't trade things with low volume. Just because of the fact that I've been in situations to where trades are going against me. And when trades are going against me, if I'm in something low volume, it's kind of like, I saw a comedian once, John Panette. He's a real big guy. And so he was talking about how he was going to go on an airplane ride, a small airplane ride. And they said, oh, we're close to the weight limit. How much do you weigh? And his response was, if it's that close, I'm not going. Because if we need to get weight out of the plane, everyone's going to be looking at the fat guy. So I relate that to option trading in that if you're in something that's low volume and you know that you don't want to, and you know that it's not like, so for example, I might trade something low volume if I know for a fact I want to own the underlying, like MOO, M-O-O, the ETF. Sometimes I'll sell puts on that to get into it, but I know that I want to get into it. I know I'm not going to trade it. I'm just going to sell it. It's either going to expire worthless or I'm going to be in it, one of the two. But if it's something that I want to get out of and have risk management on to a very tight degree, or to even any degree, quite frankly, and I don't think it's high volume enough, I mean, I don't want to trade it, because if you're one of the few guys that's in that side of the trade and you're looking to get out of it, the bid-ask spreads are not going to be too friendly to you when you try to get out of it, and you're going to be that fat guy on the plane that everybody wants to throw out.
Good moral of the story. You don't want to be the fat guy on the plane that everybody wants to throw out. Let's see if we can get, we can do one more here. This is one comes from Angus G. He writes, hey, question for you. On one of your radio shows, you mentioned buying WTI crude oil calls. What is the ticker symbol for these products? When I put WTI into my broker, I get W&T offshore. That leads me to think maybe he has a broker who doesn't do futures options, but I digress. He goes on to say, I thought USO was the best only way to speculate on crude using options. You mentioned, however, there might be better options that more directly mirror crude. Yeah, there's a lot of products out there. I mean, if you go to, CME is probably your best one-stop shop for that stuff. Just type in crude oil, go to their crude oil complex. You can see the entire litany of products they have listed on that, including a lot of crude oil options. So if you want to trade options on indeed the actual future, you can do that. You don't need to trade. We've talked about USO before. It has its pros and its cons. The con probably being that it's not really the best way to speculate on crude using options, at least not tracking directly the price of crude. Maybe the net trend, you can argue. And certainly from a volatility perspective, you can look at just OIV and OVX, and those two march in lockstep very impressively. So from a vol perspective, there are some pros to be mentioned. But if you want to track crude directly, you got to go to the actual product. And there's, you can look at WTI or any of the other products out there. I'd speculate, and I've seen this before, people write in, I can't get these products, like they give me the wrong quote. It sounds like your broker probably just doesn't do futures options. I'm not sure if you mentioned which broker he used, and if he did, I wouldn't mention it on the show, but you probably want to go to some of the larger brokerage houses that we've talked about, including our former partners here on the program, OX, they do futures options. The folks at TD, they'll do futures options, and others. So you want to go to a house that has that capability for you, and then if you want to go straight to the mothership of the big crude product, then you can go there. Mr. Rock Lobster, I know you take a shine to good old USO every now and then, but do you dally in the big crude options as well?
I do not. I haven't traded them for a long, long time. So, but I mean, the crude that's, everybody likes those because that's where the juice is. There's not a lot of juice in USO. So that's been one of the biggest problems with them right now. Now that it's only a $14 number, there's just not a lot of great stuff to do in it. That's a hard part.
And you can confirm independently here for our friend Angus that they do indeed exist. That calls on USO are not the only way to trade crude options.
Yes, you can trade the options on CL.
There you go. Independent confirmation there. Uncle Mike, I know you tend to delve more into selling those cheapy puts on XLE. I think you want to add here for our friend Angus G.
Yeah, I would. If you're not, how can I put this? If crude oil, if the CL options are too big for you, and you don't feel comfortable doing spreads, then perhaps I would look into XLE. I would prefer XLE over USO, just because you'll get a similar movement a lot of times, but you don't have to deal with the inaccurate pricing that comes along with USO when by comparison to crude oil. So I prefer XLE for that reason alone.
There you go. To each their own. Choose your ETF wisely there, listener. But if you want to go straight up CL, you can do it. Don't be scared. Just find a broker that will let you do it, and of course give you the right quotes. Unless, of course, you want to trade W&T offshore, then by all means have at it. But we're going to have at our last segment. It's time for Around the Block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
All right, everybody, welcome to Around the Block, the portion of the show we tell you what we're watching, what we're keeping an eye on for the rest of the week into the weekend. Before we do that, really quick earnings straddle update here. We'll start with EA. Like I said, they were pricing in nearly a $5 move here, and over 6% move. We're getting about a little over 1.25, so about 1.5% out there so far in the after hours. So far, at least, underperforming, at least from a straddle perspective on the EA side. Turning our attention again to Baidu. I'm kind of wondering if my quotes are off here because they've kind of been flickering and showing all kinds of weird numbers. So I won't go too deeply into Baidu because it's showing me this exactly 1 penny unched. I have a hard time believing that Baidu is indeed unched given the fact that it was pricing in nearly an 8% move. Going into it, looks like looks like it might have gotten as high as 170, so a couple of handles higher, but looks like perhaps these quotes are a wee bit, shall we say, wonky, and I will keep an eye on those as we move on into our final victim, our final name here. This is good old S-Bucks. Like I said, they were pricing in over a $3 move, about almost 5.5%. What we're seeing here, about $1.60 to the downside, or about 2.5%. So far, it seems like most of the big names coming out after the bell, with the exception, of course, of good old LinkedIn, which is still rocking and rolling up 23.25 handles as we speak. So with the exception of those guys, that one aberration, the exception that proves the rule, we are seeing a bit of underperformance from a vol perspective here going into these earnings. All right, Mr. Rock Lobster, that aside, let's do a really quick rundown of what else we got. We got SIBO coming up actually tomorrow, very near and dear to our hearts here, so we'll keep an eye on that, see how the VIX and SPX complex is holding up these days, as well as if they have to blame the term structure for some issues out there. We'll see. But aside from that, Mr. Rock Lobster was catching your eye. What are you watching for the rest of this week into the old weekend?
Well, I really want the Fed to stop ruining everything. Because we have non-farm payrolls next week.
How long have we been beating that drum?
I know, like Mark in the chat today, he's like, I'm so tired. It just locks everything up. It's such a drag. But anyway, maybe we'll look back on this as I just blame all the baby boomers. We're trying to just fix everything. You just can't fix everything. But that's a little, I'll get over that issue. But anyway, what are we looking at? I like to see if this rally in big tech continues. It's still kind of going on, not quite over yet. Maybe some people are looking at jumping into these names. We might get a little bit of Goldilocks, not Goldilocks, but Santa Claus effect, right around November 1st. Everybody starts getting a little itchy for starting to own some of that good stuff. So that's kind of where the strength of the market is. Financials took off yesterday because of the possibility of an interest rate raise. I think that will still be off and on, but still looks pretty good. Commodities dead, oil dead. And the healthcare kind of off and on. I think that's what we got. That has a recipe for a whole lot of nada. I think as far as there's nothing really to create a catalyst except for QE, which is the crappiest catalyst in the world. But we'll take what we get.
I love when your diehard libertarian leanings leak into the program. Makes for good radio, sir. All right, Uncle Mike, from your other vantage point out there in scenic and lovely St. Charles, what are you watching for the rest of this week into the weekend?
Well, I think that we need more QE, we need more government intervention, and we need to just get rid of all those whack jobs out there in Maine. No, I'm kidding, of course. No, I'd like to see the market do something. And we've just been tinkering around this level with which we've been at in January. We had it did something a couple months ago, but then it came right back. But I'd like to see some type of a trend come on into the market. And, earnings could push it up, but if they haven't pushed it further up already, I'm not convinced that it's going to. So I'm bullish on the market over the long haul, but I'm selling some short calls right now on my long call position as well as my SPY holdings. So it'll be interesting, but I would joyously roll up my call options should the need arise.
That's a very noble sacrifice of you, sir.
Thank you. That's me.
That's the altruism we've come to know and expect from Uncle Mike Tusa. He said he'll roll up his calls just to accommodate all of the rest of us out there. Well said, sir. That's going to do it for the Around the Block segment. It's also going to do it for this episode of Ye Old Option Block. But before we go, one last dalliance to the dark side. Let's check back in with each of my cohorts, my partners in crime. See what they have cooking that may interest you, starting with you, Mr. Rock Lobster. What's cooking? What's coming on the pike in the land? Oh, the pit.
November 7th, Pro Trading Workshop. For the price of an 8th on a 10 lot, you could learn something. Stop being surprised by all the stuff we talk about on the show, except for all the references to the Fed. Other than that, learn how volatility works, make your life trading options easier. And you know what? What I would suggest to most people is get some option education. Even go in, there's all kinds of free stuff available before you use your own money. Okay? Just do that first. Do it for a few months, okay? Because most likely you're going to save yourself more money than you probably would have made had you been just, flat out lucky doing something. So take some time, understand how options work, and then go trade them. Don't do it the other way around. All right? That's my little piece of advice here going forward. And the price of it was right.
Take that 8th you're going to save and spend it on some edumacation over there. You may indeed find it handy and indeed useful in some dubious times that we find ourselves now here in the old marketplace. And now we turn our attention one last time over there to the lovely realm known as St. Charles. Uncle Mike, what's cooking in your neck of the woods?
All you self-directed traders out there for, I need to figure out my 8ths. But anyway, if you are interested in trading under the RCM umbrella at either Thinkorswim/TD Ameritrade and or Interactive Brokers, if you're looking for occasional advice, we are your people. We'd be more than happy to help in any way with which we can, as well as we do have a reduced commission rate that a lot of you guys may not have access to. So if it's something with which you are interested in, feel free to contact me at 312-212-3531 or send me an email at mtosaw@rcmfs.com.
You heard the man, listeners. Hit him up if you want a decent deal on some of your next options trading. And that's going to do it for us here on the old Option Block program. On behalf of the Rock Lobster and Uncle Mike, and indeed myself, I want to thank all of you out there in our listening audience for downloading, streaming, subscribing, whatever it is that you do to get these fine programs. And of course, for sending in such great questions. Keep them coming. And we'll see you next time right here on the Option Block.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.